All right, Trade Echo, welcome in. There's a lot of familiar faces here, and a lot of new faces. Think I've never seen a lot of you or never talked with a lot of you. Today we're going to be going over Dealer's Edge, specifically how to use GEX and VEX as trading confluence. So the key word here is confluence. This is not really a buy signal. It's not really a sell signal, nor is it a crystal ball by any means. Um, what I like to think about Dealer's Edge is giving us more context in the market. It's going to show us not exactly, but it's going to show us where dealers are positioned and where price may react, where movement can slow down, and where things can really ramp up. And by the end of this, I want you to understand how to open Dealer's Edge, read the main levels, and turn that information into a cleaner trade plan. As we know, most traders are guessing. They draw supportive resistance on the chart. Sometimes it works, sometimes it doesn't. The main problem here is those levels are usually static. Dealer positioning is different because it updates with the market and in real time. I like to think of GEX kind of like the market's guardrails, if you will. It doesn't drive the car for you, and it does not tell you exactly where price is going, but it will show you where price may, stay contained, where it may bounce, and where things can get very dangerous if the guardrail breaks. That is the edge here. We're not here to try to predict things. We're actually here to understand where the market is most likely going to react. Here's something like super easy um, to kind of get the main points. So when you open Dealer's Edge, you don't need to overcomplicate it. It's much simpler than you think. You might see a bunch of numbers on the screen, but here's how I simplify it. And these are four things you need to be focused on. Number one is going to be the anchor, because the anchor is the magnet. Think of it as um, the session's center of gravity. Price often wants to gravitate around this area. Then we have flip. So the flip is extremely important because it's going to tell us the regime. Above the flip, the tape is usually more controlled. Below the flip, movement can expand faster. Third is defense levels. These are the reaction walls. This is where dealers may push back and where we can expect price to stall, reject, bounce, or even chop. And then fourth is the GEX rating. So this is going to tell us if we're in a slower, more controlled tape, or if we're in a faster, more expansive base tape. So then when you open Dealer's Edge, you don't need to stare at everything. You just got to start with these four numbers: anchor, flip, defense levels, and GEX rating. So this is GEX made simple. What does GEX even stand for? GEX stands for gamma exposure. And I don't want you to get lost in the institutional definition. Keep it simple here. GEX is going to help us understand how dealer hedging can impact price movement. When GEX is positive, the market is usually more controlled. Moves are more likely to mean revert. Extremes are more likely to get faded. And then when GEX is negative, the market can move faster, price can expand, breakouts and breakdowns can continue further than expected. So that's why negative GEX matters. In a positive GEX, I am way more cautious about chasing. In negative GEX, I can respect momentum more. So the main thing here is large GEX strikes are reaction zones. That doesn't automatically mean buy, or sell. It means you better pay your ass attention when price gets there. VEX. So, VEX is an interesting one. VEX is actually Vanna exposure. Again, we're not here to overcomplicate it. GEX helps us understand price pressure, right? Now, VEX is going to help us understand volatility pressure. And this is going to matter more around different catalysts, whether it be CPI, FOMC, earnings, major news events, or even strong trend days. And then when the implied volatility shifts, dealer hedging changes. That can create reversals, continuation, or even a break in the current regime. But here's the rule: you never want to read VEX alone. Vanna exposure is very, very powerful, but it needs to be paired with GEX. They need a tango. So you had the price in action and the current chart structure. GEX is going to give us the key levels, and then VEX is going to help us understand how volatility may impact those levels. Does that make sense? And as we know, we have three dealer edge views. So dealer edge is going to give us a few different ways to read the same market. Um, Number one, the heat map on the left is going to give us the full dealer book. This is very, very good when we want the big picture. And then pro mode, we get to actually compare SPY, SPX, and QQQ side by side. And this matters because you don't want to trade one ticker in isolation, obviously. So if SPY is rejecting a level, but QQQ is breaking down and SPX is below the flip, that's going to give us a stronger confirmation. And then we have the chart view, which is focus mode. And focus mode, that's where we can combine price action with live dealer events. And the mistake that most traders make is they just look at one thing. They will open heat map and they just look at that and be like, oh, well, I think price is going here, so I'm going to buy. We want the full picture. Heat map for context, pro mode for confirmation, and then chart view for execution. So remember, it's all a process with everything. And here's the actual process I take. Before every trade, this takes you less than 2 minutes. Number 1, I always check the current price. And then number 2, I always find the anchor. Number 3, I find the flip. Number 4, I check the GEX rating. Step 5, we're always going to find the largest walls. And step 6, you want to compare SPY, SPX, and QQQ. Step 7, you're going to wait for price reaction. Remember, pay attention to the reaction of the market. That last step matters the most because we're never going to enter just because price is near a level. We need to wait and see how does price react at this certain level. Does it reject? Does it reclaim? Does it break and accelerate? Does it chop? Because dealer edge is going to give us that level. And then the price action is going to give us the permission. So we're going to bring it back to what I was saying in the beginning. This is the entire framework. Dealer edge is just giving us the map. The chart is really just giving us the trigger. And then the price action is going to confirm all that. But we're also forgetting that risk management protects. That is it. For example, let's say SPY has an anchor at 585 and a flip at 583. That's going to tell us where the most important dealer levels are, but I'm not going to blindly trade that. I want to see the price reach that level, react, and match my chart setup. This goes with any indicator. This goes with any edge because you obviously need to watch the price action. You're not just going to go base blindly off of what you see across the tape and say like, oh, well, I see a lot of puts or like put flow or call flow, or I see VWAP like reclaiming price. Like I'm just gonna get in because it tapped VWAP. It's not exactly how you do it. It doesn't work every single time. And if price rejects at a wall, obviously I have a confluence now. But if price breaks through the flip and holds below it, now I know the regime may be changing. And the trade plan should always be simple. Where am I entering? Where am I wrong? And where exactly is my target? How much am I risking? Because if dealer edge updates and the level changes, you got to respect that. It's there for a reason. The map updates, so our plan has to update as well. And here's a bunch of don'ts. Nobody likes to be told don't or no. So let's talk about what not to do. Number one. So this is before we're gonna get into the live. Um, so mistake number one is treating dealer edge like a buy or sell signal. It is not. Mistake number two, chasing in the middle of the range. For example, if price is sitting between the anchor and a wall, there's not going to be a lot of clean edge to buy or sell. You just got to let price come to that level. Number three, ignoring the flip. The flip is going to tell us the regime. And if price loses a flip and starts expanding lower, you really don't want to keep treating the tape like it's controlled. Mistake number four, you're only looking at one ticker. You have to look at SPY, SPX, QQQ. These should all be compared. And then when they line up, the read is much, much, much stronger. And then mistake number five, forgetting that the levels update. You know, you look at it once and then you try to make a trade and then you just leave it. You know, Jesus take the wheel. This is live information. You need to recheck it over and over and over. And our goal here is not to be the smartest trader in the room. We just got to stop taking low quality trades. Okay. So let's do a live trade echo. All right. So let's look at this. So this is where we're going to take theory and make it real. So I'll show you. So up here, we're going to go and replay. Somebody give me a time. Somebody give me a time frame to look at. Friday, maybe. Friday, 2 p.m. 3 maybe. 3:30. Yesterday, I left out SPX. 11:30. 11:30 Eastern Standard Time, or I think the most important level is low key 11. If I'm being honest. Let's see. No, but that's too one-sided. Maybe that way I can show you guys both. 10:30 maybe. All right, let's see 11:30. I want to show one where there's a little bit of positive GEX, like a little bit of concentration. Thursday. $9:45. All right. Let's see. 45, and then there's 10 a.m. Okay, I kind of like 10 a.m. Right, you guys? You guys like 10 a.m.? I think I like 10 a.m. Okay. So on this replay, we're going to be looking at SPY. You guys can pull up Dealer's Edge. on 6/5, 2026, 10 a.m. So we're going to be looking at the key levels. Let me know when you guys have it pulled up, and we'll go through it together. Maybe I can stream my whole screen. Hold on. Let me actually share my entire screen. Can you guys see that? We'll even go replay right here. 10. a.m. Can you guys see the trade view? Just wanted to make sure we're smooth sailing over here. All right, guys. So I'm assuming that you guys have Trade Echo websites pulled up. You guys have Dealer's Edge pulled up, and then there's an Echo. Is there? Oh, okay. Okay, give me 1 second. It's because I'm sharing my screen. Give me a second. Okay, is it echoing still? We really took Trade Echo seriously. Okay, cool. All right. See, I'm not so old, am I? I fixed it. Yeah, thank you guys for telling me. Imagine going through that whole live just echoing. All right. Okay, cool. All right, so let's pull up Trade Echo. Remember, guys, we have this dealer edge process. So you guys have it open. Number one, we're gonna check current price. It's 10 a.m. The current price is 748.73. Go over here. It's around the same thing, 748.73 on the 5 minute, right? So number two, we find the anchor. You go back, find the anchor. Anchor says 750, and then we see the flip on the side. So that's step three. Find the flip. Anchor is 750, flip is 752. Step four, check the GEX rating. We obviously see the GEX rating over here is crazy. I like to, because there's a lot of numbers, right? What I like to do is go to gamma percentage. Where is the most reactive? We're gonna look at 750. We have literally a negative 10% reading here. So number five, we're gonna find the largest walls. So you can do that by going to focus mode. See 751, 748. You can see that we're approaching 748 over here, right? And then step six, we're always going to compare these bad boys, SPY, SPX, and QQQ. And then step seven, we're always going to look at reactions on those levels. Obviously, we hit 750. You can see there's a shift here on the 3 5 minute levels here, and you can see what else these on pro mode. You can see the three different comparisons: SPY, SPX, and QQQ. They're all aligning together for more acceleration, and a lot of it is pointing downwards. So we're also gonna, you know, we're also gonna look at the focus mode here and see how price reacts. Obviously, there's a defense line right here. We have some support, and you can see as time goes, I think. Oh, let me do it here again. Okay. So look at these 5 minutes. We have the 750 anchor here, right? Our flip is our flip is 752. So if we get above 752, it's flipping to the positive. If it's flipping down, where is it? I don't know why it's not showing here. I think it will start showing. There we go. So it's always shifting. Once we get above the anchor, we hit 751, we immediately reject it back down to the anchor. It's a magnetic zone. So we come back down. Our next level downwards is 748. You can see we come back into the anchor. We actually reclaim it on the 5 minute. You can see we're kind of bouncing between 751 and the anchor, right? As we go down, we don't reclaim it. We're kind of chopping right here. So price does not know where it's going to go next. So if we're already if we already started the market downwards and we can't for the life of us get above 751, that's telling us, okay, if we can't reclaim 751 and we keep breaking down below the 750, the next level we're looking at 748. So there's more downside. I'm not telling you this is a way on how you should get in. I'm not saying like, oh, like if it goes below 750, enter puts. Like I'm not saying that. Just see right here, we try to reclaim the anchor. We break down 748. And dealer's edge was telling us that whole time that the next level right here is a 748. Does that? And then we look back at the heat map. You see 748. There's an acceleration zone right here, 207. So that was our next big level right here, which is 7.5%. So let's see what happens next. Because look, yeah, I wasn't even looking at the charts that whole day. You see that once we hit 748, we just accelerated down and down and down. So GEX, just because it's negative, that's not telling us that it's going to be automatic shorts, right? It's just telling us that we will accelerate faster down or up. Look at that. And now it's updating. Now it's telling us 740. So the anchor actually shifted. Now it's down to 740. You see how this updates in real time, how this constantly shifts, and how this is always dynamic. What was the flip zone or what was the anchor zone is now a resistance zone. Now 748, it was a support zone. Now it's a resistant. So we call that an SR flip. And now we're back down to 745. See what happens. We break down 745. Now I wasn't here for the whole day, but I wonder, did we ever get down to 740? Seems like it wanted to go to 740. Let's see. Yeah, and we did. You see, Friday was the prime example of how powerful dealer's edge is. I mean, come on, guys. All of that was there the whole time. Now, look at that heat map. Everything concentrated into this 740 zone right here. No, Vex was in there. Okay. That 740 zone, I've never seen it this high. I'm not gonna lie. 46.9%. So let's see what happens after that. This is telling us that dealers need to do something here. So you go back to focus mode, come over here. So we're either gonna bounce over here or or accelerate even further down. But this is telling us that price is gonna start shifting. Obviously, that was towards market close, but we ended up closing way below it. Let's see how heat map looks. Yeah. Okay, and then it just disappeared, obviously. 20%. Wow. Man, that was amazing. Man, I wish I traded Friday now. Oh my god. Um okay, now we can take some questions for you guys. Let's see. Yeah, let's see. 748, huh? Yeah, that was crazy. Man, I really like that. That was really fun. You can see. Wow. Yeah. We just stayed below New York VWAP that whole time. Asia session VWAP, previous day VWAP. Like the whole market was screaming more downside. All right. Let's take some questions. Um, let's see. What does open interest volume tell us in pro mode? So if we go back to pro mode, oh, wait, let me go back to 10 a.m. So that was the set anchor we were at. Let's go over here. So what open interest in dealers says, what's telling us, it's like how many option contracts are still open at that specific strike. And it's telling us where traders are heavily positioned. So if a strike has a lot of open interest, that level can really become important because dealers may try to hedge around it. Um, it's like seeing where the crowd has parked their money, where we as retail is really focusing on these certain strikes. So the larger the open interest at a certain strikes, the more important that level can be. Because remember, dealers may have to hedge around it, and that doesn't mean that price has to go there, but it's telling us that if price gets near that level, we got to pay attention. Um, Would you apply the same magnets and levels from QQQ to NDX? Yeah, you can use that. You just got to translate it. I use QQQ and NDX side by side and compare them, and they're pretty on point. Um, will that act like in this case 750? Can we run Thursday on 4 June for a minute? Does dealer edge help to decide when to exit? I bought 750.05 put start of the day and exited too quickly. Yeah, 100%. You just got to see the reaction at certain levels, like I said. So it's up to you. Like, I'm not saying like if it reaches a certain level, you have you have to sell or you have to buy. Like, if you bought puts in the morning and you saw it, flip on dealer's edge and it just bounced around a little bit, that doesn't mean like sell. Obviously it's a good way to de-risk and to take some off the table, but you would have to decide that on your own. I can't tell you like you should take profits here, but most of the times, like if I'm looking at the dealer's edge and I see that okay, like it's accelerating more here, I might just hold it a little bit longer. Then that's up to me, but it shouldn't give you that, oh, like I should buy and sell here. Like remember, this is all for confluence. This is just an extra edge to your arsenal. Nothing more and nothing less. Um, you may have already covered this, but can you explain the positive versus negative? Yeah, sure. So when GEX is positive, the market is usually more controlled. Moves are more likely to mean revert, and the extremes are more likely to get faded. And then when GEX is negative, the market can move faster, price can expand, breakouts and breakdowns can continue further than expected. It's all about edging. Um, could you walk through how the volume and VEX tab comes to play here? Yeah, I mean volume is the same thing. Like this is just showing where retail is really parked their cars, and VEX. I'm not sure why it's not showing here, even though it was a pretty good, it was a pretty important Friday. But you would have to have VEX and GEX aligned. Remember, GEX is helping us understand price pressure, where dealers are hedging, and then VEX helps us understand volatility pressure. So this is all volatility right here. And this is going to matter more around CPI, FOMC, earnings, major news, or strong trend days. And then when that IV shifts, dealer hedging is going to change as well. So that means more reversals, more continuation, or just more break ins in the current regime. You would have to use these side by side, but I'm not sure why it's not shown here. Like it will show, um, like if I go to Thursday, I think it shows. Yeah, look at this. It was telling us that 750. And you go to the. Let's make it simple. Let's go to gamma percentage. It's literally telling us how much volatility is here, and it was there from the previous day. You guys understand? Does that make sense? For swing trades, I wonder if this is a good way. We will wait till last 30 minutes of the day, check the heat map, and look at the expiration day for swing trade. Find where this has a lot of heat and look at the chart on knowledge to see. Yeah, that's exactly how I do it. Um, I'm very I'm a big swing trader at heart, and Dealer's Edge has helped me so much with conviction and confidence on where the heck does my, because you can look at all expirations and you can even see like if I get it like I don't know like CELH or something. Uh, is it gonna give it to us or NBIS even? The heck? So here's this thing not updating. Oh, here we go. You can look at all expirations too and see where these further out expirations are positioned. You can see that we're mostly positioned over here at the 35 levels on 0717, 0618, which is closer. If price falls below 2750, then we can accelerate faster to the 25 level. You go to focus. I look at the daily here. You can see there's a little bit more room for the downside. And since there's more room for the downside, you want to see how price reacts. Obviously, we could have reclaimed the 31 level. We kept rejecting it. So they came down below 29. We tried to get above that. We rejected it. Now, what we need to focus on is 28. And if we can't stay where this anchor is, where we had previously on May 13th and June 4th, we're gonna have to monitor this flip zone because if it goes below the flip, then that doesn't mean that it's gonna go even further. It could literally mean it can reverse back up, reacting to that 28 anchor. We can reclaim that. Remember, if we lose this, then it becomes a resistance zone. For now, 28 is a support zone, and you can see that most of it is long gamma. We have a mean reversion here, negative gex above. This is telling us that volume is literally expanding. All the tools you need is here. It's literally telling us to long it. So this is telling us something's got to happen at 2750. Keep that in mind, which is around the anchor point. So when the price is around anchor right there, the flip is right below. So we would have to watch how price reacts at the anchor before making a decision. Same if ever comes to a flip. Yeah, that's exactly right. Because if I monitor CELH and go to the daily, looking at the same levels, I would always look at what I have versus what dealer edge is telling me. That's like following a trader and trade echo. It, it could tell us one thing, but it can do another thing. You can see around 27. I'm not saying that this is perfect, but around 27, price has to do something. And that's what dealer's edge is literally telling us. It's telling us that something has to happen here. It can go a little bit further down or it can revert and come back up, get into a re-entry, and then push price even further up because volume is expanding as well. Um, what does negative and positive values mean at each price? Please can you? I already explained this. Okay, so I know that a lot of you guys, think that dealer's edge is only for intraday trading, but like I'm showing you right now, it can absolutely help with swing trades. For it depends on how you use it. For intraday trades, you're going to be using it for execution. For swing trades, I'm going to be using for the location and for the confirmation. Around this level, the GEX is telling me like, hey, something needs to happen versus, if I'm looking at SPY, QQQ, or SPX. So if I already have a swing trade idea, like here, where I have an Elliott wave theory, I have Fibonacci levels, blind demand, largest technical setup, dealer edge can help me answer. Am I buying near a dealer support zone? Am I shorting into a dealer defense level? Is price above or below the flip? Obviously, we're above it. And then is SPY, SPX, and QQQ confirming the same structure? For swings, really, I'm not really checking, dealer's edge once and marrying that level for the next 2 weeks. That is a mistake. Always remember that it updates constantly. So for the swing trades, I use dealer's edge to improve my entry location, understand where price may react, and then I just manage the trade, as the levels update. And then, you know, um, let's go back. I'll give you this. Okay, so when GEX is negative, remember it's becoming more aggressive. It can expand faster. Breakouts can keep breaking. Breakdowns can keep selling. Price, may not revert as cleanly. So in a negative GEX, I'm really more careful fading moves. I don't want to be blindly, shorting strength or blindly buying weakness just because price looks extended. When you're at this level, at this strike where it's negative, this is just telling us momentum deserves more respect. Let's change the mindset from, oh, let me, short this position to let me see if this move confirms it and then if it continues. I'm not telling you to chase it, but if price breaks a key level, loses a flip, and the chart confirms, then I'm going to be way more open to the continuation. Does that make sense? And then positive GEX. So like let's see like right here, 40,000 at the $35 tape. This is just telling us where it's more controlled. This is telling us where price is more likely to mean revert, chop, even pin, or respect the levels that it's at. In in a positive GEX, I'm usually more cautious about chasing breakouts or breakdowns unless there's a very, very, very strong confirmation. And this is exactly where fading extremes can be, making more sense, especially prices pushing into a large wall and starts rejecting. The most simplest way I could think about this is, you know, if you're in a positive GEX, respect the range. And then if you're in a negative GEX, like here, respect the expansion. It's been expanding down. That one line alone will keep you out of a lot of bad trades. And then, did he ask for Vex negative? Bulls, bears, okay. And then I think people also get confused on negative Vex, which is here as well. So this one's saying negative 5.65 million. This is where it gets confusing. You just got to keep it simple. You can see there's a good amount right here, 835,000, 149,000. We'll just keep it simple. Remember, it's volatility pressure. When VEX is negative, I'm just paying attention to, how volatility changes may, pressure dealers hedging. And the practical sense in this is negative X is just adding fuel when the market is already moving aggressively, especially around catalysts or sharp volatility shifts. So if we have negative X, negative GEX, price below the flip, in this case we're above it, uh, the chart is breaking down. I'm not trying to buy. I'm not trying to be a knife catcher and buy every single dip. This is the kind of environment when price can just keep expanding further down or even further up. But again, don't trade VEX by itself. VEX is just supporting evidence, and then GEX just gives us the level. Price action gives us the trigger, and then obviously we have our risk management, which protects our asses. And then sometimes GEX and VEX will disagree. Let's see. Oh, right here. So at 30.5, right? We have a negative GEX level, and then right here we have a positive VEX. So if GEX and VEX are not giving the same message, you got to slow down around those levels. That doesn't mean there's no trade there, but it means that I need stronger confirmation from the price action. Um, so it's telling us, you know, don't force a trade around there. You gotta wait for the market to show its hand. You gotta see when we come to this level around the 30, even a little bit before it, does it shift? Does it go from negative to positive? Does it change the vex from a positive to a negative? You know, you gotta see if price holds that anchor. Does it reclaim the flip? Does it reject the wall? Does it break and accelerate? When the data is mixed, the chart has to do all the talking. And this makes sense. Like we're at the 0.786 Fibonacci level. Something's got to give right there. Let's see. Why does it seem like when we're in a bull market, the GEX overhead is always positive, the negative GEX nodes are always if it sells off? Because when it sells off, there's more volatility, and then when GEX overhead is always positive, it's because it's telling us that that's where it wants to be controlled. That's where dealers want the price to move to. And you'll see that the anchor points absolutely matter in those days too. Just remember, the chart is always going to give the final say. Dealer's edges are giving us context. Always rely on the chart. And if dealer edge is showing like a major wall, such as like way above us, but price slices through that, some days, you'll see GEX, even though it's positive, you'll see it get sliced through with strength. I'm not going to argue with the market. Um, if dealer edge shows support, but price loses it and holds below, I'm not going to pretend that level though matters. The worst thing you can do is use dealer's edge to justify, trying to be stubborn or, you know, um, trying to trying to get into a level where it's telling us like, oh, there's a lot of positive GEX here, and buy into it. Just use it to build a better plan, not to fight the price. Like if it's showing us, hey, it's gonna go, or hey, like a lot of dealers are positioned in this area. Obviously, you're gonna want to go with that trend. Just if it's spread across, like very lightly, it's best to avoid it. In my humble opinion. Oh, there we go. I think it was like Tuesday or something. Yeah. Like usually you'd want to avoid this. Oh, wait. When it's so spread out and like so little, like I don't really like trading those. But that's my humble opinion. And then, how often should you check this? Obviously, you're gonna want to check before every trade. Want to see where the levels are going, what's disappearing, what's updating, and you can see how much this rose. This was our level, and it just kept rising and rising and rising and rising, getting more concentrated, and price just kept staying around this level. Um, always check before every entry, before adding, before taking profit, before holding through a major level. Um, it's always going to give us that live read, so you should always be updating yourself as well. I see. So if you ever do see a negative GEX VEX overhead, is that a potential hint of a short squeeze opportunity? Um, no, I never really treat it that way. If I'm being honest, I really just use. I always use my charts for you know what the heck the what are we doing in the day? I have indicators. Um, you always want to see where a trend is going. I'm not here to look for reversals or short squeeze opportunities. I'm not really an opportunist like that. I'm a VWAP trader. I keep it simple. If it's above VWAP, I trade it. If it's below VWAP, I will, short it. Keep it simple. And I'm not really looking for opportunities like that or news catalyst. So maybe someone else here or a different analyst would answer that better than me. Okay. All right. Any last questions before we do our giveaway? I'll take one more question. Majid, he says, "What is dealer's edge exactly?" So in simple terms, dealer edge is just showing us where the option market may create support resistant magnets, pressure points and acceleration zones, as I just showed you guys. It helps traders see, okay, so for like anchor, let's go to anchor. So anchor, this is just showing us where price may gravitate. We have the flip zone. This is where the market regime can change. Then we also have the defense ladder, where you can see right here. This is showing us where price may stall, reject, or even bounce. You can see right here it stalled a little bit. And, we have GEX and VEX. This is just showing us whether the tape is more controlled, volatile, compressed, or ready for an expansion. And then is really just showing us open interest is really just showing us where options positioning is crowded. It's just a positioning map. It just shows us exactly where dealers are forced to hedge, where price may react, and where movement can speed up, slow down, stall, and we use it as confluence. We're not here to use it as a buy or sell signal. I'm gonna keep saying that over and over and over because a lot of people, often mistake it. Are there any tools that would put the GEX on the chart on TradingView? Would that be helpful? I just use focus mode and then I just compare it with my chart. Missing your indicator on TradingView, is it the release? Yeah, or didn't you name? I can link it again. But that concludes today's masterclass. C Blast. If you wanna start hosting, you can host. But the last thing I want to say is you guys have been amazing. I hope this Dealer's Edge Masterclass really, really help engrave, a new way to look and approach the market. And I also want to say you don't have to only use it for intraday trading. I showed you guys a real example of how dealers positioning and dealer's edge actually works with swing trading. It's not all about just day trading. Remember, you have day trades, swing trades, and even your long term portfolio, whether you're shorting or even going long in the market. You guys need to understand you guys got to expand your arsenal, manage your risk, mitigate losses, find something that works for you. And if you're unsure, you shouldn't be sizing up a crazy amount or putting all your eggs in one basket. It's really important for you guys to go through all the different master classes in Trade Echo. We don't just do this so we can hear ourselves talk. We do this so we can genuinely help you guys. We're here to make everyone here money. That's the main goal. Being in Trade Echo has literally changed my life for the better. And it's so crazy that every single morning I wake up for the market like it's Christmas morning, like I'm about to unwrap a bunch of presents. I believe you guys can do the same exact thing. But furthermore, I want to say thank you, Chris, for having me on here, being able to help all the members in here. And I will pass it on to you. Don't go anywhere. I think we're doing a giveaway for Trade Echo membership. Um, you can do the I low key wasn't prepared for the duck race. Right, right. That's exactly right. And incorporating swing treats as well. I feel like we don't really get to touch on that. Um